Sean, good to see you. Today we are talking through 3 ways to reduce your IRMAA for Medicare Part B. If the Social Security Administration considers you a high-income beneficiary, you will pay a surcharge known as the income-related monthly adjustment amount. And the first tier starts with a modified adjusted gross income of $103,000 if you're single, $206,000 if you're married filing jointly. So Sean, let's start high level. How does IRMAA work and what could cause this penalty?
Absolutely, Erin. So IRMAA is based on your earnings from 2 years ago. So 2 years ago, if we add up your wages, potentially you were working then, any 1099s you had, any other income, any long-term or short-term capital gains taxes, you add up all this income, and if it exceeds those levels that you mentioned, they will add on this IRMAA adjustment, which could potentially bring your Medicare Part B monthly premiums to almost $600.
Yikes.
So it's really important, to look at what your income is and make sure that the government isn't overcharging you based on these things. What we find happens a lot, Erin, is when people retire, 2 years ago, while they were working, they potentially were making really good money.
Right.
Now that they've retired and they're just getting Social Security, or maybe even they're not taking Social Security, they're waiting on that. The government's looking 2 years prior and saying, "Hey, you made a lot of money. We're going to have to charge a lot on your IRMAA, on your Part B." So if that happens, you can file for them to reconsider it, but you need to keep an eye on that. It can be
Right.
a big
Absolutely.
number. Yeah.
And there are some strategies that we can implement now. So let's talk those through. Number one, Roth IRA conversions. Why?
Absolutely. So if you do a Roth IRA conversion, you're taking your money from your IRA. Every time you take money out of that IRA, it's taxable. You're putting it into the Roth, and then will grow forever tax-free. The key thing about the Roth is that you won't have RMDs, which are your required minimum distributions. So if you're in retirement and you are taking money out of your IRA, or you force to take it out for RMDs, every dollar you take out is taxable. That's going onto your 1040 and could potentially impact the IRMAA. If, however, you're taking money from a Roth, either because you need to or because you want to, it's tax-free, and that won't go to your 1040, and it won't influence any IRMAA adjustments they may make.
Mm-hmm. Next, you suggest open and invest in a health savings account, and these are uniquely triple tax advantaged.
Health savings accounts are amazing. They go in tax-free, they grow tax-free, and they come out tax-free. They're designed to pay for medical-related expenses, either when you're retired or even before retirement. So instead of taking money, let's say, Erin, out of your IRA to pay for some medical deductibles you might have, you can access this HSA, take the money out. It's not going to impact your 1040. The government's not going to consider it income, and you can use that to pay your bills, which will then hopefully decrease that income and avoid the IRMAA adjustments.
Mm-hmm. And then the last strategy we wanted to talk through, qualified charitable distributions. How does this work?
These are wonderful things. So oftentimes we find, whether it's to avoid IRMAA, Erin, or to just reduce a tax liability when we're retired, when we are faced with our required minimum distributions, instead of taking that money from our IRA or our 401k and paying taxes on it, we could transfer it directly to a charity. So if your RMD is, let's say, $5,000, if you took that and put it into your checking account, that's going to be $5,000 you're going to pay taxes on. Instead, you can do a qualified charitable distribution, take that move it to a qualified charity. They're going to get that benefit. You're going to pass it on. It's a great thing to do, and you're also not going to pay taxes on it. So you're not going to pay taxes, and it will, again, try to avoid that IRMAA adjustment.
Well, it's good to know there are strategies out there to lower that penalty, but clearly the sooner you get the ball rolling, the better. So Sean, if somebody wants to talk this through with you, how can they reach you?
Erin, please call us at 603-715-2335. We also have a lot of great information on our website. If you go to daviswealthmgmt.com, you can look at more information there. Additionally, you can put time right on my calendar from our website. Click Connect with an Advisor. You'll be able to find time right on my calendar. Click Go, and we can chat.
Great. Sean, thank you.
Thanks, Erin.